Welcome to the Transparent FX Academy. I'm Nick and I'm a top author and trading view with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we must notice is that at the moment we have a market which is rejecting a quite strong and significant historical structure support zone. In fact, from here, all this previous rejection to the upside was created. Again, here, the market tested its zone and rejected it to the upside. We can see how, once again, when the market tested its zone here, it immediately rejected to the upside. Then we had the break below the zone, break back above. At that point on the retest, once again, this level started acting as support and the market is currently rejecting it to the upside. Now, in a situation like this, what we could expect is more potential bullish continuation for a deeper rejection to the upside, as already happened every time that the market tested this level in the past. Now, if we zoom in and we look at the most recent price action, we can also identify how there has been some minor structure being created during the rejection to the upside away from that level. What we can see, in fact, is that here, when the market created this red candle, it actually created also a resistance level that was then broken to the upside with this impulse retested here as support. And now we had another break of structure breaking above this previous high, which once again is previous resistance, that if the market will retest here as support, we could expect the market to reject to the upside, as already happened here. So essentially, we have the possibility to create exactly the same pattern that the market has just created in the retest of this same level right here. So at the moment, the monthly time frame seems very bullish. Dropping down on the weekly, what do we see? Now, from a weekly perspective, we can see how the market has just approached significant weekly structure. From here, all this previous rejection to the downside was created. Again, here, the market tested its zone and respected it as resistance. We can see how after that we had the break above the zone, retest, and currently the market rejected it to the upside and went all the way down to test once again the same zone. There is a possibility from here to see another rejection to the upside, as we can see that the market in the past clearly has been respecting this level. So at the moment, monthly and weekly both seem to be approaching a potential reversal higher. We can also notice that as we have an impulse and a correction, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.786 Fibonacci retracement lining up precisely with these previous levels of resistance and support, which are now still acting as support as the market is approaching it from above. This actually creates confluence of support at this level, which once again, we could expect this market to potentially reject to the upside. Going down on the daily time frame, what do we see? Now, from a daily perspective, I did speak about GBPUSD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection higher. Again, when we had this impulse and correction from here, I explained all the reasons for which we could expect a potential reversal higher. Then we had this impulse and correction from here. Once again, I made a full breakdown explaining all the reasons for which we could expect this impulse, correction, and continuation to the upside. And in the very last analysis from here, I explained all the reasons for which we could expect this reversal higher. After that, we had the correction, and it's been quite a while that I have been speaking about the fact that a reversal higher is definitely a possibility. Now, by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. Now, before we speak about what kind of structure we currently have here from a daily perspective, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. Now, first of all, let's check the data for the GBP. Now, keep in mind that if you're checking the data for the GBP, you're actually already checking GBPUSD because all currencies on the spot are traded against the USD. Now, what we can see here is that with the last reports, we went from having a negative net positioning of minus 24K net positions with way more shorts than longs, with 52K shorts compared to only 28K longs, all the way up to now having plus 63.7K net positions, meaning that currently we actually have more longs than shorts, so the complete opposite, meaning that GBPUSD at the moment is actually getting quite strong because it's getting longed by institutions. So what we could expect in a situation like this is for a potential reversal higher, specifically if we will see a break of structure. Why do I say that? Because even though monthly and weekly and the CO2 data are all aligning for the bullish side, here on the daily everything is still bearish. The market is creating lower lows and lower highs, so it's clearly in a bearish structure and a bearish market. And until it will remain below the previous low, so essentially this one here, which is now previous daily support, turn resistance here, until the market will remain below this level, it can easily continue lower, and it actually will continue lower because we have a daily bearish market. So what we need is a potential break above this resistance. Only if we get a break above this resistance on the retest of the previous resistance turn support, this is where we have good probabilities of seeing more institutional longing. At that point, further increasing the probabilities of a potential reversal to the upside. So if we get the break on the retest of this previous resistance turn support, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that given the high request, at the moment there is the massive special promotion as you requested, with a huge upfront discount on the mentorship program price from $497 all the way down to only $97, one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account there, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. At least go and check it out at transparentfxtrading.com. The link is also in the description, and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you, and I will see you in my next breakdown.